Artificial intelligence isn't just driving headlines and stock prices, it's now propping up the real economy. According to the New York Times, global spending on AI infrastructure will reach $375 billion this year and is expected to climb to $500 billion in 2026. That money is flowing into data centers, chip factories, power plants, creating jobs for electricians, engineers, and construction crews, even as housing and office projects slow down. Brookfield Asset Management estimates the world will pour $7 trillion into AI infrastructure over the next decade. For now, the boom is cushioning the U.S. economy against high interest rates and sluggish real estate markets. But economists warn the parallels are striking like the dot-com bubble of the early 2000s. Enormous investment is being made on the assumption that future profits will justify today's frenzy. As Raymond James economist Eugenio Alaman put it, there is always a risk that very little of what they say is going to pan out. Okay, what's the real message here? We are in an AI frenzy and the money is going everywhere. It does seem a little bit similar to me to the late 1990s when the dot-com cash was flowing. But beware. Anyone who tells you they know there's going to be a crash in the next 6 months, sell all your stocks, be very wary because they are wrong the vast majority of the time. I'm going to be honest with you. I don't know the future, but neither does anyone else. Okay, let's dig a little deeper here. I mentioned the parallels between the internet boom, the 1990s, 2000s. Billions were poured into dot-coms, fiber optic cables, all sorts of things. And in 2001, all wiped out, or a huge portion of it wiped out. There was a PC boom in the 1980s, and in the early 90s, you had so many computer companies, Compaq, Dell, all sorts of companies that no one's ever heard of since then. They got wiped out. Radio, people forget about how many people were investing in this radio technology, and the vast majority of them went bust. Same with automobiles. There were hundreds of automobile companies 120 years ago in the United States, and then it whittled down to 3. So if you invested in the other 197 companies, you basically lost money. Railroads, very similar, massive overbuilding, lots of bankruptcies, but it became the backbone of the economy. So again, the forecast is for $7 trillion. I don't know if that's really true. One of the things you've always got to be careful about is when you see estimates about the future. If I estimate it's going to be 500 billion and someone estimates it's going to be 1 trillion and someone else estimates 7 trillion, the media is going to glom on to the larger number because it's more interesting and more exciting. This is from an outfit called Brookfield estimating 7 trillion. I don't know if we can put much faith in that. But what I do know with absolute certainty is AI is changing a lot of people's lives. And there is tremendous excitement about it. I know I use AI every single day. AI helps me write my scripts. It helps me organize the show. The image you're seeing on the screen right now is AI driven. So you could make the case that very few people actually used pets.com back in 2000 before it crashed. And now all the money put into the internet was for things that were really still at the conceptual stage. We're far past that when it comes to AI. It's not at the concept stage. People are using it every single day. If you think you're not using it, you're wrong. It's integrated in everything you do. This is very different, for example, than Bitcoin. You know, the analogy I've seen lately with Bitcoin is you need to think of it as basically a company, a big company, but its market cap for all the Bitcoin is less than Apple, and any one company can go up or down and go bankrupt. I think that's kind of the proper way to think about Bitcoin. I don't think that's the proper way to really look at AI these days. It's not like one company. It is feeding and it's becoming a part of the central nervous system of the entire world economy and certainly the internet. And that's why it has to be seen as legitimate. The usage rate to me is what is so important. Nobody actually uses Bitcoin. I realize I'm going to get some hate mail for that, but Bitcoin is something, it's pure speculation. You buy it not because you're going to use it to buy a car, maybe a drug deal, but you're buying it simply with the hopes that some other sucker will come by later and pay you more than what you paid for it. That's not what people are doing with AI companies. People are not buying a share of stock in a IPO mode or any mode, thinking, I'm just doing this so I can sell it to someone higher. No, AI is actually being used every single day. I'm using it right now. It's integrated in every web search you do, every inquiry to ChatGPT or Claude or Grok. It's being used massively. And when some new service is used by the whole world, sometimes dozens of times a day, hundreds of times a day, it's real. It means there's value there. People are going to pay for it at different levels, different parts of the experience. There's different parts of the value chain. And that's why I won't say this time is different, because everyone always gets burned when they say that. But I don't think this is a flash in the pan. This is not quite like the late 1990s when venture capitalists were just handing out 10, 20, $50 million checks to 19-year-olds who had some crazy idea about, I'll just have a website that sells licorice sticks with more flavors than anyone else. Give me $50 million. There was a whole lot of nonsense like that back in the 90s. And it was pretty obvious to a lot of people, this isn't really sustainable. And so much money was going to companies that didn't have a prayer of being profitable and were unprofitable and going public. We are not seeing companies go public. Now, doesn't mean there can't be a lot of fraud. That doesn't mean that there can't be a bubble, because these days it's so much easier for startups to get private sector money and money before they become a public company. But what we're not seeing is companies going public, millions and millions of consumer investors, average investors, mainstream investors, plowing in their life savings to an AI company that has zero profits and is hemorrhaging a lot. What we are seeing is big traditional companies that have been around, incumbents for a long time, the Microsofts of the world. These days, Facebook is an old company. Google's an old company. They're spending fortunes on AI. But, if AI goes bust tomorrow, Google's still going to be around. Facebook is still going to be around. They have revenue models that will stand the test of time, at least for now. I'm not saying they'll never, ever go belly up. You look at the history of the Dow Jones or the top most well-known profitable companies in any era. 30 years later, most of them are gone. But for now, the ad revenue for Google and Facebook is just so strong. They can afford to lose hundreds of billions of dollars on AI investment, and it's not really going to put them out of business. So I think it is important to be conscious of the fact that our economy may be benefiting almost unfairly from all of this investment in AI. And I think it's papering over a lot of massive destruction in terms of policy at the federal government level. And all these tariffs, all these meddling, all this, government taking over, taking 10% stakes in chip companies, I think is massively, massively destructive to our economy. And it's not showing up yet because the AI boom is propelling things. But I think it's perhaps an illusion, and it's a ticking time bomb. But unlike so many other talking heads on YouTube, I'm not going to predict exactly when we're going to go into recession, because we talked about yesterday, nobody really knows the future. That is what makes the world exciting and what shows how nobody really has a monopoly on true insight on the future.